Tesla isn't just dealing with a stock decline, it's facing a full-scale backlash. In the past few weeks, we've seen Tesla protests across multiple countries, customers selling their cars in outrage, and even reports of vandalism targeting Tesla showrooms. At first glance, this might just seem like a temporary controversy, but here's what most people aren't paying attention to. This backlash isn't just about public perception anymore. It's already impacting Tesla's stock, its customer base, and even its sales numbers. And later in this video, we'll talk about a new development that could make things even worse for Tesla investors. So make sure you stick with me till the end. Before we dive in, hit that subscribe button. We're about to break down what's happening with Tesla beyond the headlines, and if you own the stock, you need to understand how this could play out. Right now, there's a growing movement that's being called the Tesla takedown. At first, it started with individual Tesla owners speaking out, people frustrated with Elon Musk's increasingly controversial public stances. But now, it's turning into something much bigger. Tesla dealerships are seeing organized protests. Customers are publicly selling their Teslas as a form of protest, and negative media coverage is piling up. We've even seen reports of Tesla showrooms being vandalized in multiple cities, and in some cases, people are openly calling for a boycott of the company. This isn't just a social media trend. It's starting to affect how people view Tesla as a brand. And as we'll get into later, brand damage can have real financial consequences. And here's the thing, it's not just about Tesla as a company, it's about Elon Musk. Because at this point, Musk isn't just Tesla's CEO, he is the brand. And that's exactly why this backlash is growing so fast. Wall Street's relationship with Tesla is also shifting, and it's happening fast. For years, analysts were willing to overlook Tesla's volatility, production delays, and even Musk's unpredictable behavior because they believed in Tesla's long-term growth story. The thesis was simple. Tesla wasn't just a car company, it was a technology powerhouse that would dominate AI, self-driving, and energy. But now, that narrative is falling apart, and analysts are starting to slash their price targets. Mizuho just cut its price target for Tesla by 16.5%, warning that the company is facing a triple threat: declining sales, a shrinking market share in key regions, and growing doubts about its AI and autonomy business. Other firms are following suit. Analysts are now downgrading Tesla not just because of sales declines, but because of Elon Musk himself. Morgan Stanley's latest investor survey revealed that 85% of investors believe Musk's political involvement is hurting Tesla's business. That's an absolutely massive number, and it's something Tesla has never faced at this scale before. Tesla's customer base has also changed dramatically. Initially, Tesla attracted environmentally conscious consumers, tech enthusiasts, and progressive buyers who saw EVs as the future. But as Musk has increasingly aligned himself with controversial political figures, we're seeing a clear shift. Musk himself has even admitted that his personal views may have cost Tesla brand value. Some analysts believe that Tesla's brand damage is already showing up in its financials. This backlash isn't just a media controversy, it's affecting Tesla's sales, stock valuation, and ability to attract new investors. And here's why that's such a big deal. Tesla's stock has always been priced based on future growth. It's never traded like a normal automaker. But now, analysts are starting to change how they value the company. If Tesla loses its premium valuation and starts getting treated more like a traditional automaker, that could mean a major collapse in its stock price over the long term. And the biggest warning sign? Even some of Tesla's most loyal analysts are backing away. Just look at Adam Jonas from Morgan Stanley. He's been one of the most bullish Tesla analysts for years. But now, he's signaling a more cautious outlook, warning that Tesla needs to prove itself again to justify its high valuation. At this point, Tesla and Elon Musk are inseparable. For years, Musk's personal brand was one of Tesla's biggest assets. He was seen as a visionary, an innovator who could transform industries, disrupt traditional automakers, and push Tesla to dominate not just EVs, but AI, self-driving, and even robotics. But now, that same personal brand is turning into Tesla's biggest liability. And what's making all of this worse? The public backlash against Tesla is now turning physical, because it's not just analysts and investors who are changing their stance on Tesla. It's customers, protesters, and even former Tesla supporters. And that's what we need to talk about next: the showroom protests, dealership vandalism, and what it means for Tesla's future. Tesla's backlash isn't just happening online anymore. It's turning into real-world protests, vandalism, and public displays of frustration. In the past few weeks, Tesla dealerships across the U.S. have been targeted. Some locations have seen organized protests right outside their showrooms, while others have reported vandalism, graffiti, and property damage. In California, protesters gathered outside a Tesla dealership in Pasadena on March 8th, holding signs and chanting slogans against Elon Musk's political involvement. Meanwhile, in Bucks County, Pennsylvania, around 100 protesters stood outside a Tesla dealership with signs reading "Deport Elon" and "Free Tesla from Elon." Some even live-streamed themselves selling their Teslas in protest. A Tesla dealership in Santa Ana Pueblo, New Mexico, was also hit by vandalism, with reports of damage to storefront windows and charging stations. These incidents are part of a growing trend where former Tesla supporters are turning against the company, not because of its cars, but because of Musk himself. As these protests gain traction, politicians and high-profile investors are weighing in. Donald Trump called the Tesla vandals domestic terrorists and claimed that attacking Tesla was an attack on American innovation. He defended Musk's right to express his political views and suggested that critics were trying to take down one of America's most successful companies. Meanwhile, California Governor Gavin Newsom had a very different take. He stated that Tesla's brand damage is self-inflicted, arguing that Musk's increasingly controversial business decisions and political affiliations are alienating customers. And this isn't just about public perception, it's also affecting how big investors see Tesla. Ross Gerber, a longtime Tesla bull and major shareholder, recently warned that Tesla's brand is in real danger. He publicly stated that Musk's behavior is now a major risk factor for Tesla's stock and that institutional investors are getting nervous. Here's why this matters. This backlash isn't just about media headlines. The more Tesla's reputation takes a hit, the more it could impact customer demand, investor confidence, and even future partnerships. And the worst part, Tesla's competitors are already taking advantage of this chaos. While Tesla is dealing with brand damage and political controversy, companies like BYD, Ford, and Rivian are aggressively expanding their market share. BYD just unveiled a fast-charging technology that can deliver 400 kilometers, about 249 miles, of range in just 5 minutes. This breakthrough is already boosting BYD's stock and adding pressure on Tesla, which has struggled with vehicle demand in China. So the real question is, can Tesla fight back, or is this the beginning of something much bigger? Tesla's stock isn't just struggling because of market conditions. It's now directly feeling the impact of this growing backlash. Tesla has always had a strong brand, but public perception is now shifting fast, and we're already seeing it reflected in the numbers. Even more concerning, 59% expect Tesla's deliveries to decline in 2025, the first time investor sentiment has turned this negative. And these concerns aren't just theoretical. Tesla's sales numbers are already showing signs of weakness. In China, Tesla just raised Model Y prices by 1,000 yuan, about $695, but it comes after months of deep price cuts to keep demand afloat. The price increase was seen as a sign of stabilization, but analysts worry that Tesla's overall position in China is weakening. Germany is an even bigger problem. Sales crashed 76% year-over-year in February, and local automakers are rapidly gaining market share. In the US, Tesla's sales fell 2% in February, a small decline, but for a company that's supposed to be in hyper-growth mode, even a minor dip is a major warning sign. And here's where things get even worse. Institutional investors and insiders are cashing out. Over $100 million in Tesla stock has been sold by executives in recent weeks. And it's not just any executives. High-level insiders who have been with Tesla for years are unloading shares. Even Elon Musk himself has faced backlash from investors questioning Tesla's biggest shareholders. When a retail investor shared a breakdown of Tesla's top 10 investors, Musk simply responded with a heart emoji. But Wall Street isn't laughing. Mizuho recently slashed its price target for Tesla by 16.5%, warning that the company is facing a triple threat: declining sales, a shrinking market share in key regions, and growing doubts about its AI and autonomy business. Other firms have followed suit, downgrading Tesla not just because of sales declines, but because of Musk himself. Here's why this is a big deal. Tesla has always been valued as a tech company, not a car company. But now, with growth slowing, analysts are reevaluating how much Tesla should actually be worth. If Tesla starts getting priced like a traditional automaker instead of a high-growth tech stock, its stock price could collapse much further. But there's one analyst who thinks otherwise. Adam Jonas from Morgan Stanley, one of Tesla's biggest bulls, has recently predicted Tesla stock to rebound plus 90% within the next year. But here's the big question. Is this just a rough patch or the beginning of a bigger decline? Tesla still has strong technology, an extensive EV charging network, and a first-mover advantage in many areas. But the company has never faced this level of public backlash, investor skepticism, and sales pressure all at once. So the question is, does Tesla have what it takes to turn things around? Let me know if this works before I move into the final section. What Tesla needs to do to recover and what investors should be watching next.